What is going on, everyone? Welcome. It is John Salama, CMT. You're watching Trading Trends with Rocco, the Maltese all-time high dog here. New all-time highs here in the Dow. Hope everyone had a great July 4th weekend, watching the World Cup, having some hot dogs. Go USA tonight and go Egypt tomorrow too. Let's take a look before we get into the tape here. Come out if you're in New York City on Wednesday, July 15th to Connolly's. We're going to have another trader meetup with a month-over-month recap of everything that went on in the markets. Top 5 biggest movers, longs and shorts. And boy, it has a lot going on this past month. All right, let us get some portfolio moves. ARKK this morning. And have a bid in right here to enter BUG, B-U-G. We'll take a look at why. Obviously, you know they're both breakouts. Let's get into it, okay? Today is July the 6th. China, a big day today. And ARK, that is where the love is, up about 2-3%. Maybe now at the last posting. It depends which China ETF you are looking for. And ARK having a nice day today as well. And boy, the name of this video is Smart Money's Dumping Defensives. And boy, they are. Staples, utilities, and healthcare falling. Healthcare coming off of all-time highs. But definitely folks want risk today and growth. They do not want stability. Dividend stocks also under the gun today. They don't want just straight income. They want risk on. New all-time highs for XLI and Dow. They usually dance together. Obviously, the industrials. Confirms industrials. IBB, the NASDAQ Biotech ETF, all-time highs. BUG, Cybersecurity, all-time highs, hence why I'm bidding it. Probably get filled during this call. EUFN, European financials. We always say, how bad can the world be if European financials are hitting all-time highs? In the weeds there, of course, because of rotation, dollar strength. There's a lot of parts that go into that. AI trade, getting away from that. Also insurance, there is some defensive money there. This used to be the belle of the ball a couple of years ago, if you remember, on the recruiting revenues, and it really dances in this market, works well. And aerospace and defense, new all-time highs, okay? Let's get into the tape here, okay? Recap what's happened in the morning. Very light volume as well. As you can imagine, a lot of traders, I think, camping out basically for USA Belgium, but it's very low volume today. SPY right here live at 1:10 p.m. Eastern. We're looking at 20 million shares, which is we average 63 million for a day, so very low. Semis ripping today. They were up higher earlier, but Micron up nearly 3%. AMD's doing much of the dancing, up 8%. The Q's up nearly 2% today. Tesla up 6%. Some monster movers. You know, you read the articles, oh, Max 7's dying, it's losing. No, it's rotating away. It's like tracking a wave in the ocean. You go in, then you come back out. They're not losing. The sandwich shop on your corner is not going to be really able to enjoy the upside of AI hyperscalers. Who will? Those Mag 7 players, okay? So it'll just be that kind of a flywheel. Even Apple getting a love today, up 1%. NVIDIA up 1%. Intel up 3%. That thing's been on a ridiculous run. Microsoft not feeling the love. Old hardware, not so much. Or old software. Now 1.2, Broadcom up 4.5, Meta up 2, all green here on the screen here. Semis, ETF up 3, Google up 1.5, Taiwan Semi up 5, international semis typically have been getting more love. Marvell up 3, and Palantir up 3 with the defense tech rally. We'll take a look at that because it has fell on hard times. Here is the intraday chart. So here is the bell, rang, opening bell here. Liquidity enters the room. We're basically from 4 a.m. To the open, essentially trading at 748 in SPY. Boom, opening bell happens. We don't see that level again. They took it to the high of day just seconds ago at 751 half. So we're talking high of day right here. We're 1.5% away from new all-time high. So that's pretty much here for the day. Things look obviously strong. We'll probably get towards 752. By the end of the day, I always say it works on any kind of chart view. When you break out from a former area plus overbought, they're going to buy first and ask questions later. And we truly just got there because we got over the highs from July 2nd right here, right now at the 751 quarter mark. So I do think we'll have a 752 by the end of the day. I'm not a really big zero DTE guy, but I think there's probably some value there if you were to buy a 751 end of day call or 752s, but make sure you time your entry right. Getting away from this noise on the intraday, let's zoom out. Here is the 1-year chart. Don't forget, SPY, Dow's doing it today. NASDAQ did it somewhat recently. The S&P had their all-time high. It's crazy to think about almost, but it's 5 weeks ago now, June 2nd, right after, Memorial Day ended in early June. That's when we had our all-time high at 760. Here we are at $9 away. As I said, just 1.5%. But we are at a 58 RSI. Nice climb here, getting that above the neutral 50 mark. You can really count on one hand since the ceasefire by Trump has been announced on April 7th, the days that we closed under 50 RSI, that to me is obviously more strength in the bidding confirmation than sellers. Okay, so we've been basically in a bullish accumulation phase since that announcement. Pretty astonishing. The cycle work has gotten a little bit difficult with this W here. This was a bit of an oopsie. This had a real big drag. Much of it was on June 26th, was, if you recall, last Friday with that whole semis decline, and they rallied at the end of the day. And that's why you have this very tall shadow. And then usually when that happens, just to get really in the weeds here, 717 we hit in SPY that day. We closed at 729 and VWAP was 727. That is amazing strength. Basically, anyone that sold, unfortunately, that day, basically below 725 equivalent SPY was a sucker, because the market hasn't been lower since that. I mean, obviously in the past week, but truly hasn't been that low again since early May. So a very strong market here. As I'm seeing here for the following, the rest of the week, it truly is. The indices are going every which way. That's why we opened the show with saying the Dow was putting in new all-time highs, at least on the ETF level, and the Dow itself, 50,000, whatever it is. I track the ETFs as we are here. Looks like this S&P does want to try to get very close. I'm buying things, as I said. VXX put a new all-time low. We'll take a look at that in the chart. That is fear structurally been removed from the market. We're basically getting back to that tranquility phase that we had in January, way before we had any war in Iran. But we did have the Venezuela, if you remember, capture to start the year. So here, for me, it's tough because I don't like the volatility here that's happening in terms of I want to see what today's candle does. Volume's absent, but that's not a massive deal for me. I think we get to like 755 in the next several days, and that looks like, to me, that could be it. However, Trump's saying the stock market is going to go through the roof. You saw this Trump account for the kids going in this morning, which I love, by the way. Nothing much more patriotic you could do than that. But I'm not so sure we have enough to take out this resistance. If you do it through the breakout method system, where you do the ATRs, and we'll do that when we get into the individual mover. So that's pretty much my call. I do think S&P SPY wants to climb just towards that heavier resistance point around 755, and I think that'll be it. Again, don't forget, the reason why we're saying that is the run. I'll forgive this oopsie where we captured and penetrated to 717. I'll say the low here was this push that we've had from 727 on June 26th to here, 751. That is a great run. I'm not saying it's over by any stretch. I'm just saying in terms of where the trampoline you sink through and rise above, it seems like we could finally be hitting our match right around 755. But again, the risk still is to the upside than the downside. Let us go through the individual movers, and then you'll see why the market is shaping up the way it is today and longer. All right, what are they buying today? This is very interesting. This is just, I'm not really capturing or entering these trades, but the moves today have been not in America, so to speak, outside the Qs, but KWEB. I'm looking at the multiple standard deviation movers. Why? Because that lets you know where the institutions are the most offsides, in addition to retail. KWEB, Chinese Internet, the biggest mover today, okay, up 2.5%. Don't forget, this group peaked with Bitcoin, okay, back last October. I did a bunch of stuff, too, last week. Bitcoin truly looks like Chinese tech, okay? Unfortunately, this one, Chinese tech, is up 2.5%. I think Bitcoin's up about half as much, although the miners are having a strong day. So there's a lot of bifurcation and differentiation within each individual asset. So truly know what you own and own what you know. So Chinese Internet stocks peaked October 2nd at $43 and truly gave up the ghost here. A couple of ways you can do it. I typically, if you want to be a lazy trader on this, is when the 200-day moving average starts to go lower and you break multiple month lows. Really no reason to be in China Internet. With a confirmation of being oversold. No reason to be in this group as of February of this year. If you were holding bags, and that was with the stock printing $32. This just hit 52-week lows a week and a half ago. Okay, that pierced $23, and now you're having a decent, 10% ish bounce over the past week. Where now? Always looking for uncorrelated alpha. That is what I do here. Hence why I bought ARKG. I'm not in biotechs and bidding cybersecurity, uncorrelated themes. This looks like it has a little bit more to go. The Chinese internet. Let's look at VWAP on the day. 25.57. It's there right here, right now. They shot it up as high as 25.71. It has not been able. Look, the technicals are really, to me, everything. Look at this. It has not been able to get above the 50 neutrality point since when? Right here for an oopsie on May 13th. And then it went right straight down. That puts in, what, a 6-month high? That puts in a 4-month high. And that is very heavy ceiling at $31. Now, where do we go? I think it has a little bit more to go. It's very important to see if it can close above 25.45 for at least, say, 2 to 3 days in a row. Why that figure? That is its 21-day exponential moving average. Should it do that, I do believe it has a chance to get to this resistance point at about $27. This, to me, is still a horrible name. It is not where the AI game is. This is strictly just rotation through, international acclaim. But again, look at all these red bars. Yes, it's got a couple green ones. The Chinese internet, again, has not been the place to be, honestly, for all of 2026. Just showing you why we're talking about it. Massive day today. I would probably honestly sell calls should it get to $27, but this is more of a sit and wait scenario. It's not even a breakout of any kind, so nothing to do in the breakout system, really more so just monitoring the situation. You could sell the 24 puts. That's pretty spicy. I'm still overall a seller of Chinese internet, not a signal, just watching because they are raging at the China today. The next biggest mover, let's see if there's any breakouts. MCHI is running. FXI is running, very similar. Okay, this is way below. So again, in terms of everyone flocking to technology, look at this. China overall, so this includes China real estate, China consumer discretionary, China everything, much worse. RSI at 37 here, not even close to the 21-day exponential. So you want to see top-down confirmation. It's the way I do things. So I want to see Qs doing excellent, right? That's a lot of United States, and then you go through tech, yada, 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 right? China, I'd rather have China doing great, and then I could sift through and go to China internet. All that being said, though, looks like it will enjoy a dead cat bounce just because it's a little bit lagging of Chinese internet. I see this going to about 33.25, which is right around here before it gets tired. Really not much ado about nothing. This just coming off 52-week lows when the whole globe was enjoying a bull market rally. So that 33.25 will likely correspond with a 50 RSI and the 21-day exponential moving average. And folks will say, too rich for my blood. So you can buy stock if you insist. I don't really like that play. Otherwise, just China's really not been the place to be. I really don't want to suggest, buying October 34 calls. There's much better trades on the board. If you're begging for China, you probably have another, like I said, 2% to go higher, I think, in this. And folks will maybe want to chase. I don't think it's wise. Just oversold a couple times since March. And just look at the bounce. I mean, the whole globe bounced when the ceasefire was announced. Look what China did. It got to 30. Let's look at this. It went from 35.5 best to 38, and that was it. So there's just other shoppers, investors, or what they're called, are going elsewhere. But today they are liking China. I am more of a breakdown trader. Hence why we're saying to act on the downside for China. Also, we'll look at a little bit of Ethereum too. They're catching up with some of the laggards. Let's look at lastly Ark. So they're buying Chinese internet, they're buying China, and they're buying Ark today. If you are in those instruments, you're probably having a very nice morning. Ark, this has been interesting. So the 200-day moving average is going up barely. Okay, it's basically, and this is pretty rare for Ark, it has been absolutely flatlined, ironically, since the ceasefire. And that figure of the 200-day moving average is at 78.25, right where my cursor is to make it easy for you, okay? We are, Ark, right here, right now. Look at this. This is pretty. We are just barely, we're squeaking above the January highs. It just got there as we speak right now. We are back to the November levels. We're actually back to where we were on election day. So we are looking at 8-month highs here in Kathy Wood's Ark. She obviously has a lot of Bitcoin, NVIDIA, and a lot of growth names, and it looks absolutely stellar. I like this chart here, and it hasn't been above 50 RSI since June 12th. If you want to do this right here, I'll give you a trade on the breakout system. Is 273 ATR. If you need some spec and you want to get in the boat with Kathy, you can do that right here. 2 ATRs is going to be about $5.40. Well, around here, $84. You can buy it right here, right now. Should it get to 78.5, get out, because it's going to be magnetized to the 200-day moving average, and potentially you get some volatility and it goes towards $75. So I would do this buying straight up stock, as potentially it can get towards its old highs of $92. I don't think that's in the cards right here. I still see ARK quite a bit as a Bitcoin correlated, and that one's still being a little bit heavy, but ARK overall still seems like it will maybe split the difference, maybe not quite $92, but maybe you can get to possibly this heavier resistance at around $88. Candle looks very decent today. $84 is the high. View up 83.02. Looks very strong. I like this breakout here that's been trying to etch since the end of May, and it's finally doing it, honestly, in the past 3 days. This is not like a breaking story. And look at the last thing on this. The 200-day moving average has flatlined since mid-April. So a high growth group like this has been gathering strength. Typically, when it breaks out, this thing will sheerly and just in an unadulterated fashion break out higher. So I would play it like I just said, the breakout system. Otherwise, if you want to do calls, you can buy those. They're going to be expensive. I would do the October 88 calls, and then I would sell the July 86, 87, 88s against it. Check for optimal delta and your margin constraints within your portfolio. That's what I would do. Always sell something against it, so you front month, so you can sell, so you can subsidize the trade and you can sleep at night. That's what I would do here. Very strong looking chart though, similar to SPY in that you can count on one hand the days that it's closed under 50 RSI since the ceasefire has been announced, and those are the instruments I want to own. Okay, I bought ARKG, so another sister basket of Kathy's funds, more so on the genomics biotech side. This is the everything fund, obviously. So they are loving ARK today. Let's look at what they are selling to fund this, and they are funding safe. The name of the video is the smart money's leaving defensive trades. I wrote an article a couple of days ago, or a couple of weeks ago, about the defensive trades being dead, and today they are selling it here, 1.5%. Look at this, similar. It's interesting. The ARK before was channeling that 200-day moving average, right? Garnering strength. Look at this. This Staples has a floor of its 200-day moving average. I still expect that to hold here. Staples was the place to be in February. Mid-February, this thing peaked. And you're saying, wait a second, but the war started right around here. Why didn't folks flock into Staples? They didn't. Okay, they sold it down here. Things got a lot more expensive too. Don't forget, oil was surging. Folks are not going to overpay for Procter & Gamble. These instruments are very under duress today, and that was a false breakout on May 19th, and it hasn't been there since. We'd said before, XLP is not going to be the worst place to be if you have all these AI stocks. I would wait for this one, the bottom. This one potentially can visit the floor of, I think it can potentially go to its 200-day moving average. Actually, that's the bet I am making. I think it bottoms this week somewhere at an 82 handle. I wouldn't chase calls on this right here. This has been coming off, though. I do want to say, in terms of cycles, this one's a little bit more cleaner. Since mid-June here, look at that tango. It tried to get to 86.5 or $87 twice, rather. May 19th, couldn't do it. Tried doing it again a month later, couldn't do it. And now looks like a perfect candidate if XLP was higher vol to sell strangles. I love selling, the idea of selling an 87, 81. The problem is you just don't get paid in it. I might play with this and think or swim and roll it every 3 weeks. Again, so it's basically trading $84. You sell $2 above. You sell essentially $2, maybe $2.50 below to secure that 200 moving average. I think you're going to be okay, but do be forewarned. XLP, not the highest volatility. When you sell strangles, it does suck up on your account. So again, I look for this to bottom here and then have a rally again towards 86. I like selling the strangles on XLP today, down 1.4%, which is a multiple standard deviation move for Staples. These are all program sales. There's 3 sales I'm giving you. Another one's utilities. They are selling defensive. This is not, let me look at rates today, just double check live. Rates are up small. I'm looking at TLT down 20 bips, bonds lower, rates higher. And boy, they are selling utilities. Is it in here? Yes, down 1.2%. Again, that's a pretty big move for utilities. They are selling these assets to fund higher growth things, potentially like a Chinese internet or the broader Ark. I do not like utilities. This, to me, looks like a clearer chart. I don't want to just straight up sell strangles. I think this is going to go lower. I think this will break the 50 neutrality RSI mark and go lower and do this little dance underneath its 200-day moving average over the next 10 days or so. I think this rests with about a 40, not grossly, undercuts. I don't think we're calling for, 3 or 6 month lows or anything like that. But I do believe with this momentum heading lower and this ceiling here at 46.5, that we will undercut our 200-day moving average and probably hover right in here with a 44 handle. Calls to make here. I kind of like, again, this is XLU. Volatility is horrendous. Don't forget, VXX is putting all-time lows here. So really understand what you're doing when you're selling calls or puts. Be aware of that. Here, see what you get paid. I don't have the option chain in front of me here in terms of risk reward, but selling, the 46, 47, you're not going to get paid a nickel for it, I don't think. I would sell the 46 halves as that one's listed July. Because I do think this one goes lower. Otherwise, you can buy the 45 puts going out to say, give yourself always time on the options with a stop loss. I would go something like October. It's utilities. It shouldn't cost you a ton. And then as soon as you do get that 44 handle, I would exit the trade because my low on this, I don't think it breaks this low of 43 even. All right. But utilities to me is going lower. Otherwise, you could sell the stock outright. But again, you're trying to collect a point. All right. And the last thing they're executing here, selling to fund those rallies today, is healthcare. Healthcare, different looking chart though. New all-time highs this morning. Okay. 163.91 is a new all-time high this morning. And then a reversal down 90 bips. I had one of these days last week too. Just an absolutely stellar run. You want to talk about assets that have very few days under 50 RSI. This hasn't had one since May 12th with a clean break above its 200-day moving average. So healthcare looks absolutely astonishing. You see under the hood, Lilly all-time highs, Moderna 52-week highs, different parts of the risk complex. Some of the medical devices are not doing well, like a Medtronic. Last I checked, I bought ARKK, so some more of the upstart trials type of biotechs are doing super well. So healthcare is a defensive in that regard. Johnson & Johnson, very different from a Moderna, of course. Here, obviously, with an all-time high, you can do the breakout system. 280 ATR, nice and easy. So $5.60, you could buy it right here, right now at 162. Should it get down to about 156 half, get out, because it is likely heading to 150. Save yourself that spread, that difference, as it could potentially get hugging its 200-day moving average, which would coincide with its 200-day moving average and its 50 RSI. I don't think they'll drop it further than that. This has been an astonishing run, honestly, from 149, right when the dividend was paid, all the way to today's high, all-time high of 164 in healthcare. Wow, astonishing. Yeah. So that is anything else? No, not quite. All right, let's go. Top 3 gainers of the past 5 days. Yeah, it was a crazy week. We had the holiday and everything else, but they're still significant due to the size. I do want to tell you, there's a lot more risk to the upside than to the downside, obviously. The number one gainer, and hence why I'm bidding it in the background right here, right now, to new all-time highs right here, right now, cybersecurity. Love that. Uncorrelated theme, right? We're talking about AI. These are not straight up AI plays, but you're going to need them to protect against AI. CIBR is another cybersecurity ETF that is hitting highs today, or very near highs. Look at this. And this is not news, okay? This has been green every day since June 23rd, and basically every day except one since June 18th. So they have been just globbing. I don't know if that's a word, but they've just been gobbling this thing up since, oh, look at that. Since tax day, this thing hit a low, a 52-week low. The 2 days within 48 hours of the ceasefire being announced, cybersecurity hits a 52-week low, and it was still on sale all the way up until here. And then look at this. Very interesting technical backdrop here and setup. You have a falling 200-day moving average, a close above it while being overbought. That is a lot of different action. That is like you're on your boogie board in the ocean. You just got thrown down by several different ways that you thought you were going to get in. And I just got filled in the background. Bought bug right here, $40.83. So I'm trading with you right here, right now. I got in. And you want to do the same exact thing. The ATR is 131, so 260. So you could buy it right here, right now. But what I'm going to do is, should this drop $2.60 to $38.20, I get out, because this thing could go as low as $31, $33. So I don't want that. Otherwise, I'm going to enjoy the gains, because, again, when you break out from a former area with overbought, and oh, look at that. It's exactly what's happening. That area was $38.50. We are overbought now. I'm looking to go to blue skies here, and there is no further highs, because this is an all-time high for the ETF that started trading 7 years ago. Okay, so blue skies ahead, and that's why we like buying new highs. It's uncharted territory. All right, that's pretty much it. I love that. Okay, next thing. So this is the best ETF of all week, of the past 5 days, up into right here this second. Number two, and I hit an all-time high today. Look at what they're buying number two, and I guarantee you this is not hitting an all-time high. It's Ethereum, the second best ETF in the whole world in the past week is Ethereum, the poster child for just garbage. Honestly, no offense to the Ethereum folks, but it's been really bad. It's been like Chinese internet. Ethereum up 14% versus Bugs 15% over the past 5 days, averaging, something like very close to 3%-ish a day. Ethereum, horrendous looking chart. Obviously, this one has not, 2026 has not been its year. And now you're trying to get this, somewhat small bounce off of 11.5 to 13.5. A massive rally, though, in Ethereum. Like I said, 14% in the past week. Where do we go from here as it's up now 5%? A very strong day here for Ethereum. Oh boy. The reason why this is an interesting point here. So $13 even is this 21-day exponential moving average. Every time this is, all the rallies, honestly, ensuing for this year since mid-January, when this one fell out of bed on the way to its lows that it hit in June. And again, it looks like it's possibly going to hit in July. It hits that part, and we're talking about strong assets that are hitting, you can count them on one hand, under 50 RSI or above 50 RSI. Look at this. This is finally 52.2 RSI. It hasn't been this high since mid-May. And look at that. It marked an interim top and then goes lower every time. Here was a different fold. April 17th, folks were really bulled up on all risk assets after the ceasefire. And boom, this thing got to a crazy 18 handle. And it, almost let go of half of that on its way down. So right here, right now, I do think Ethereum can be a cheap beta play. I think this one goes higher. This has been putting in very constructive candles here. It's actually pretty crazy looking development here, because we have a rising RSI. And look at this. All green since June 26, minus this one red day. Very strong. Oh, man. I almost never recommend buying Ethereum, but the charts are the charts. I think this has a decent 2-week run. I can't believe I'm saying it. I think this has a decent 2-week run. To what level? 14 even. I just don't. It looks very heavy here above, and there's been a lot of price discovery for minimum 5 months here, especially through this ETF. So I do think we have 50 cents to go higher. Be careful, be surgical, especially with an asset like this. I think it goes higher. Plus, another thing, it's up 5% today. I've just been saying it's averaging 3% a day. It is garnering strength here. Folks woke up Monday and say, no, I want risk. I'm going to dump dividend stocks. I want risk. Ethereum is a fine proportion of risk. I've been saying this is inverse of VXX. VIX just put in a new all-time low today through VXX. So it should garner strength for Ethereum, as it's also the second best ETF performer of the past week. Small time frame, I know, but it lets you know where the markets are here. So I do think we head towards that 50-day moving average, about 1430, and I think that's it. But I do think it has a decent run. Trades, be careful. You can buy some cheap calls. I would still go probably October 14s. They're not going to be super cheap because market makers don't want to sell upside on crypto, essentially, just because of the way that the derivative vol goes in terms of versus SPY. Folks really have a desperation to ensure and protect downside on their portfolio. Hence why folks flock to buying puts on SPY. It's the opposite in crypto. Folks have a true fear of missing out or FOMO, so they shed. They're fearful of the calls. Hence why those are typically more expensive. Folks don't care about protecting to the downside in crypto. Hence why they say hodl, diamond hands, all that. Otherwise, I already gave you the calls. And if you want to buy, it's not really a breakout. You gotta, I mean, even on the cheapest, scantily, I mean, like the smallest, you need a 1 month breakout. So I would need the highest thing, highest price since June 6th. You need to get above, $14 if you're going to do that system. But I already gave you the trade I suggested on that. Ethereum, second best ETF in all the land this past weekend. Number 3, defense tech, and that's where we were talking about Palantir getting. This was greatly affected, of course, by the war. This group, and I owned it many times to start the year with all Venezuela, and then not so much after the war. Again, look at this. A couple weeks after the ceasefire. Just understand that this group peaked January 20th with the whole Venezuela thing, and then boom, fell out of bed truly April 24th. This was after here's the ceasefire. It was holding 10, hanging 10, surf term, right? And then boom, very structural breakdown here. Once you fell under the 200-day moving average, okay, with multiple month lows and being oversold, something happened with this group. And that's when, folks were kind of half joking, oh, Palantir's going to zero. No, it's not. But it definitely did get too big for its britches. And look at this, a 52-week low for defense tech last week. Wow. Usually when you see a 52-week low, usually the high is over here. And then you go, it's like AMC or Wendy's and those kinds of things. And you see this thing bowling ball all the way to the floor. Here, the 52-week low is in the middle of the chart. And the 200-day moving average just started going lower. So for me, this is a very interesting chart. Defense tech obviously has to do with a lot with what's going on. Defense budgets all around the world are still going up every year. I believe they're going up for the next 10 years, at least for the States and globally. So, but you want to be careful of the valuation. I like this here. I think it's going to be magnetized to its 200-day moving average. Thankfully, it's at 68.75. Trades, you can't really do a breakout system because it's not really doing anything. It's just a week and a half ago removed from a 52-week low. I do think this gets magnetized to its 200-day moving average. That is $69. What I would do is probably by October 66 or 69 calls for this group. I also like that's above 50 RSI, and it's been doing that oh my gosh, it's done it maybe 3 times since the ceasefire. These are things I pay attention to, and I want to see. Don't forget, the 52-week low here is $58, so it's already had a decent $7 run off the low. That's what we're talking about. It's up 11% in the past 5 days, or 2% a day. Is it losing or garnering strength? It still looks great here. Green every day. This one's so choppy. You could tell folks get on all sides of the boat, it seems. This all red 6 days in a row, and now it's green 6 days in a row. And it had very similar herd mentality trading here, of course, after the ceasefire and so on. So very interesting looking chart. I do think it goes higher over the next 10 days or so to 68 to 69, and then rolls over. I already told you how to trade it. Otherwise, too, you could probably sell the 62 July puts if you're looking for some debit. All right? And, okay, top 3 losers of the past 5 days. What have they been saying? Get me out of. New all-time lows for volatility. I've been talking about this for weeks. I said look for new lows coming in. And, yes, it is structurally built to put in lows, not all-time lows. That's important to understand. The way this is set up by the Ipath fund has to borrow futures every day. When SPY climbs every day, basically 50 bips, it feels like, this structurally goes lower and lower and lower, but you always want to pay attention when it puts in new lows. VIX, SIBO VIX, is not putting in all-time lows. There's a little bit of a differentiation there. I look at this plus UVXY. Look for VXX. Also, when you have a new all-time low, I want to see it confirmed no matter what it is. I want to see the instrument. Sometimes I'm psychotic all the time. But sometimes I take off the ticker and I just look at the charts and I'll trade it from there, put real money on. Sugar, Microsoft, Bitcoin, Tesla, don't care. I want to always see the chart confirmed. So I'm getting an all-time low, but I can't even get to 34 on the RSI. Huh? that's a little strange. So I'm looking for this to bottom this week. I think 21, and we mentioned that handle back at the old lows. I think it was honestly the end of May. We were calling it was a 24 handle then. As I look for it to go lower, it's like the sun coming up. You can look at VXX going lower with the market doing what it's doing. Look for this to get a dead cat bounce. I do think this is going to get to 23 half to $24, which would be, oh my gosh, what happened in the market that we're having a 10% rally in VXX. Last thing on this hasn't been above 50 RSI since the day of the ceasefire. That is proof telling you things change in the market. Truly, fear has been structurally moved when that ceasefire. We went from, this war is going to last 4 months. Oil's going to go to 120. It's going to creep in CPI, and everything's going to be more expensive for everyone for a long time. I don't think so. Maybe people are losing out on fun because there's lines that are being longer and all these, and FIFA World Cup tickets are, $2,000 to get in, that kind of a thing. But all I'm looking at is VXX all-time lows. Look for a pop to 23. I don't trade VXX structurally. Lots of other things you could do around it, knowing what's happening in the market. If you were insane and wanted to, other thing you would do is short, but I don't short VXX. But if you really wanted to, the ATR is $1. Two of those bad boys would be $2 to $21.63. You could do it right here, right now. Should it get to $23.63, get out. Although I think that's probably the best it's going to get, and then roll over. All right. Okay. What else did they sell to fund this? And VXX down 9% in the past 5 days, or almost 2% a day. Today, doing exactly that. Just it loses 2% a day every day. That's what it does. All right. Basically, at least for the past week. Number two. This is interesting. Home builders, the second worst group. Okay, but down 4%. Or almost 1% a day today. Now 1.5%. Look at this ugly oopsie. This stands out. June 25th, this thing went to 118 on a VWAP of 116. They closed it at 116, and that started the ball rolling off the table. This thing looks to be racing towards its 50 RSI neutrality point, and this 200-day moving average is going lower. Don't forget, this group bottomed on May 19th at an ugly $94. Did the home builders. This is a rates play. As soon as we start talking about higher for longer, higher forever, these guys take a dump because nobody really wants to file mortgage applications if that is the backdrop. I don't like this right here. It looks less bad, and the market loves less bad, but I would stay away from this group. But obviously, look at these candles. I'm looking at this in terms of technicals from a short-term formation. These candles don't look good. And it's just not breaking the trend it's had minimum for the past week. I want to see this go down minimum, or at most down 80 bips a day, and then start to flat. These candles have to get smaller. This is horrendous for right now. I think over the next 10 days, this traverses and goes lower, also to be magnetized towards its 200-day moving average level at 107 even. It is channel, essentially range bound, so no break out or break down system as it heads towards 50 RSI. Stochastic momentum looks to be rolling over. Pretty natural movement for XHB. I would sell the 114 calls. Don't think you're going to get paid. You can check it out, though. Go out, roll the 35 delta. Puts to July, if you like. It might very well be that strike, but I don't think it gets there anytime soon. Otherwise, you can buy the October 107 puts. Be careful and have a stop loss in place. Home builders, the second worst group in the past week. If you own volatility, you're hoping for a crash. That didn't work in the past 5 days. If you own the home builders, unfortunately, that didn't work either. And then lastly, the third biggest loser, my baby, Anyang. Hello, South Korea. Understand, all Korea hit highs on June 18th at 221. And then look at this very ugly candle on July 2nd. Really ugly, down 3%, and then rallied. And then here we are today, up a massive 5%. South Korea is, it's just a crazy dog with a long leash. No offense, Rocco. He usually has a shortish leash. All right, he woke up. This to me looks like an oversold buy. I like this here. I operate on the breakdown system. As I said, this looks like to me, you can't keep Heart of a Champion down. I think this will rally. It might not happen, in the rest of the week straight line, but this to me is saying that last week where it lost 3% in 5 days. By the way, that was the third biggest loser It was volatility, which is inverse. Understand what the appetite is from the market. The biggest loser is volatility. That's an inverse signal, meaning obviously it's basically long for the market. Number 2 is home builders. Okay. So we have one loser, home builders down 4%. The other 2 loser was South Korea. Look at the chart, for goodness sakes. You can't keep this thing down. And it's down 3%. The market is telling you, and then today's microcosm, dumping utilities, dumping healthcare, dumping consumer staples to buy Chinese internet and Ark. The market's telling you it wants risk. So I do think South Korea will realign. I think it's going to have strong 2 weeks. If you want to be lazy, you can wait for it to close above 196, which is a 21-day moving average, and then it'll let you know that the race is back on. These shorter-term moving averages, the 9 and the 21, will start to curl higher. Algos will seek out that strength, and then before you know it, this will start getting back to new highs. This chart looks great, very different from silver. I know folks, including myself, had really had similarities between the two, but not so. So Korea looks absolutely great in terms of trades. Like I said, wait for it to break 196 if you want to get in right here, right now. Go for this one looks like it's going to be very strong very soon. South Korea. You can buy the stock. The thing is such a crazy machine. The ATR is $12, so just understand that on a $190 stock. Top 3 trades of the past 5 days as we get out of here. Long bug, I just got in. Best trade of the week. I'm glad to be in that. And it's an all-time high. So it's one of the best trades of the year and one of the best trades of the week and one of the best trades of the day. So I'm happy to be in it. Maybe you are too. Second best trade of the week, long Ethereum. Wow. And then long Shield. I told you that has a bit more to go. It's the third best trade of the week. All right. Thank you for joining. Go to johnsalama.substack.com. Subscribe. And we will see you on Wednesday. Go US and die. Very nice.